Hooty hoo, all my stock market gamblers. Welcome today. It's Monday. Stock market's back open, and we have a lot to talk about already. It's only Monday. I mean, right out of the gate, we gapped up higher. Dow was up about 400, Nasdaq's up about 200. And then as the day rolled on, we're into negative territory. What happened? Well, we came out with this spending bill, right? $430 billion. We're going to fix the climate, no problem. But what the spending bill is going to do, it's going to reduce inflation. Somebody explain to me how spending $430 billion is going to reduce inflation. Now, I know I was brought up very strange. I was brought up that you earn the money first before you spend it. Now, our government, they're along the lines where you spend the money and then you figure out how to tax the people later. Now, me and you, we're the ones that are going to be responsible for that $430 billion. They say, oh no, Mike, the big businesses are going to cover all that money. We're going to tax them at a 15% rate. And that may be true. They might tax big businesses, but here's the funniest thing I've heard. All right, now if your big business is owned by a hedge fund, it's exempt from being taxed like that. That tax is exempt because the hedge fund owns it. I wonder why that is. You know, it kind of makes me think like the best investment a hedge fund or a private equity firm could ever make is to buy a congressman or a senator. And, you know, I mean, I don't know. It's just kind of embarrassing that I live in a country where my government's for sale to the highest bidder. All the congressmen can be bought. All the senators can be bought. Well, heck, the whole government can be bought. But don't get me wrong. I'm grateful that I live in a country where we can, you know, print endless amounts of money and nothing happens. Nothing bad happens. We can print money, trillions and trillions of dollars, and it's all going to be okay. Well, I don't think it's going to be okay. Now, what did I do today in the market? Well, I had a small short position on, and I was thinking about taking it off, but I said, no, I'm not going to take it off. I'm going to add to it. I added to it today. Now, why did I add to it? All right, let me give you a trading tip here. This is a trading tip that most people don't know about. It's called the bullish percentage, BP SPX. You put a dollar sign in front of that and it'll pull up a chart. Dollar sign BP SPX. It's the bullish percentage indicator of the SPY. Okay, of the S&P 500 actually. So it tells you how many stocks are bullish and how many stocks are bearish. It's the bullish percentage indicator. And right now that indicator is at 74%. 74% is extremely high. The last 3 times in this year that's happened, we've had these big pullbacks. And I'm expecting a big pullback again because we've reached to that. We're in the overbought position on the bullish percentage indicator. Now, you can look at that and you can go, Mike, you're an idiot. Why are you going short this market? That's just what I'm doing. Do your own research and you do what you do. But I added to my short position today the other reason, of course, the VIX is still screaming that in the next 2 to 3 weeks, the VIX is going to spike up and the market's going to pull back in. We'll see how that all plays out. That's what I'm doing today. I thought you might enjoy that. Okay, so let's move on to the real estate market. Now, the real estate market is what I think we're in kind of this perfect storm. Now, people think everything's fine, and in my area, prices are only going up. All right, but here's the perfect storm. Here's how it plays out. All right, so we got these builders, right? They're building homes at a record pace. 1.5 million homes coming on the market. These are new houses. Okay, now we have these investors. Now, these investors, they're starting to run for cover as the interest rates go up because their profits go down. There's 20 million homes owned by investors in the United States. Now, I say about 10% of those are going to get sold, about 2 million homes. But there's also this thing, it's called the shadow inventory. Okay, shadow inventory is the number of vacant homes that are in the United States. It's about 15 million homes are just sitting vacant. Now, these could be vacation homes. They could be investors waiting to sell their homes. They could be anything. But anyways, 15 million homes right now are they're sitting vacant. Okay, that's fascinating to me. And we got foreclosures. Foreclosures are coming online like really fast, really fast. So we got all this inventory coming online. And people will tell you, well, Mike, we need the inventory. This isn't a perfect storm. Well, there's one thing that people aren't really talking that much about. And I want to talk a little bit about it today. It's called demographics. Demographics. Okay, old people. Baby boomers. What are we doing? We're getting older, right? We're getting older. Okay, now how many baby boomers over the age of 65? Now, I'm not over 65, no. But the ones that are over 65, how many own homes? Well, there's about 28 million of those that own homes. Now, a lot of those, what states are they in? California has about 2.3 million of them, and Florida is like the highest, no, I don't know the exact number, but Florida is the record for old people, right? So old people. So, okay, now as you know, well, if you listen to my channel, I just got done visiting my mom in an old folks home, a retirement home. Mom's 99 and she lives in this old folks home, but not everybody in the home is 99. They start moving into the home right about age 70 and up. 70 and up, they're living in these old folks homes. So where are the baby boomers going to go? Well, a lot of them are going to go to old folks' homes. Some of them are actually going to die. They're going to die. And guess what the heirs do? Well, they sell the house. I mean, I die, my heirs sell it the next day. That's just how it works. When they die, they sell the property. Nobody wants the property anymore. They have no need for it. Now, you go, well, Mike, can't they just keep it around? Sure, they could, but they're not going to. A lot of them are going to sell these homes. 28 million homes are owned by old people, people over the age of 65. These people are dying. They're going into homes. They're not that healthy. Our senior citizens really aren't that healthy. Now, don't get me wrong. Some of them are. My mom's healthy. She's 99. But a lot of seniors are not that healthy. They work too hard. They didn't get enough rest. They had bad diets. And they gave up their health. They traded their health for all of that. But what else? What else? Okay, demographics now. What do we got coming up? Well, we got, let's call them the millennial generation. All right. So in the millennial generation, what's happening? Fewer and fewer of them are having children. They're not having children. So do they really need a house, or would they be okay with just an apartment? I don't know. I like a house. I like it. I like the room of a house. But a lot of millennials are opting for apartments. That's just what they're doing. Okay, so the demographics is going to come into play. Now, Mike, that's just crazy talk. I mean, okay, you calling that a perfect storm? No, I am calling that a perfect storm. Now, here's the other thing. Now, a lot of people say we need a black swan event to really crash the housing market. I say we've already had that black swan event, but people aren't really recognizing it. The black swan event was when the mortgage rates went from 3% to 6%. Okay, 3% to 6% is like, I mean, to double the mortgage rate. I've never seen that in the history of my career. It just never happens. Doesn't happen, right? Okay, so, Mike, that's not a black swan event. We got these 40-year loans coming out. We got these adjustable rate mortgages coming out. It's all going to be fine. All right, well, let me ask you a question. What if we go from 6% to 12%? What if it doubles again? Well, that could never happen. Well, it just doubled. You realize that, right? Okay, so it is possible. The percentage would not be zero that we go from 6% to 12%. And you say, well, Mike, these mortgage rates, they're already starting to come down. Look, they're already almost back to 5%. Well, they're down about 5.2% today. Okay, 5.2. All right, but that's if you have an 800 or above credit score. What if you have a 700 or below credit score? Well, you're going to be paying about 6.5% right now. Okay, now, when mortgage rates double again from here, I mean, if you have a bad credit score, you're going to be paying well above 10%. Now, you're saying that's not going to play out. Once again, that's just my opinion, and I'm sure in your area, mortgage rates will stay artificially low. Because, you know, in the past, the reason they're artificially low is the Federal Reserve, they kept buying mortgage-backed securities, and it keeps a cap on how high mortgage rates can go. But the Federal Reserve, they say they're going to stop doing that. And they say they're actually going to sell the mortgages they have. You know what that's going to do to interest rates of mortgages? It's going to spike them higher. Yes, I do believe we're going to get above a 10% mortgage rate. And that's probably going to happen about this time next year. We'll see how that plays out. Once again, just my opinion. I know you think the 40-year loan's going to solve the problem. You think the adjustable rate mortgage is going to solve the problem. I say the black swan event has already happened when we doubled interest rates, but it's going to happen again. And that's going to put an end to what I would call a biggest housing boom we've had, right? We've had a huge boom in houses. It's been a great run. We've had a great run in the stock market. Just in the last month, we're up about 14% Well, I think both of these have problems right now. I think it's going to come back in. I think the stock market is going to come back in and then head higher. I think houses are going to come back in, but I don't see them heading higher, not for many, many years. If you're going to buy a house, my advice is make sure you want to live in that house for 10 years to get back to the price that Billy Bob paid. I'm Tall Mike. If you like this stuff, give me the thumbs up. If you really like it, hit that subscribe button so we can talk again later in the week. Bye-bye now.